Hello and welcome to Live Wire Markets. My name is Chris Conway. For this Fund in Focus, I'm sitting down with Rob Hattersley, who is the Group Head of Capital at MaxCap Group. Today we'll be discussing the MaxCap Investment Trust and the opportunities therein. Rob, first of all, thanks so much for joining us.
Thank you, Chris. Pleasure to be here.
Before we dive into the detail, could you just tell us a little bit about the fund itself, the MaxCap Master Trust, and what it's all about?
Sure. So the fund we have is an evergreen, which means an open-ended investment trust. It's for wholesale investors, but it attracts capital both from high net worth private investors and large institutions looking to get an exposure into the commercial real estate debt space in Australia. Being an open-ended funds, investors come in, they get immediately deployed, which is a very attractive feature of a fund versus going and trying to execute deals in the market. Immediate deployment into an existing large pool of assets. So these deals are typically $30, $40 million deals. There's currently 50 deals within a portfolio of about $1.2 billion. So a large diversified pool of existing loans. Investors get the opportunity to invest in either a first mortgage sleeve or a high yield sleeve. First mortgage sleeve, which is a very popular option, is a very low risk, but in the current environment, attractively returning investment. It targets 500 basis points over the cash rate, which today means around a net 9.35% return. That's net of fees. In fact, today that sleeve is returning closer to a 12% annualised return, so substantial outperformance for an investment where you have currently LVR of around 61-62%. So there's a lot of headroom to any value correction, and therefore what we would believe to be an outsized return for risk in the current environment. There's also a high yield sleeve, which is 800 basis points over the cash rate. So that's targeting around a 12.35% net return. And that takes on board a little more risk, but still relatively conservatively geared, allowing again significant headroom to any value correction. The fund also offers quarterly liquidity, which again is a very attractive feature for investors. And most of these loans are what we call self-liquidating loans. So there's natural liquidity being created within the portfolio. And when you think about that in today's world, where you're getting the opportunity to be last capital in, first capital out, significant headroom to value correction, attractive returns and relatively good liquidity, it sounds like nirvana in an investment sense.
Rob, there have been some challenges in commercial real estate.
Yes.
How does that impact the commercial real estate debt market in particular?
Yeah, no, it's a good point, Chris. There's no question that we've come off the top of a very sustained period of outperformance for real estate more broadly in Australia. There's been a correction underway now for 12 to 24 months. It's playing out more in some sectors than others. For example, in particular, the office markets in Australia have been going through sustained correction. It's actually leading to a significant switch for a lot of investors from real estate investing to debt investing. Debt investing actually has a negative correlation to real assets, so it tends to outperform during periods of correction or underperformance of real assets, and we're seeing many institutional investors in particular make the switch from real assets to real estate credit, where they can get a slightly higher return for a materially lower risk, again often in a self-liquidating investment form. So it's been a very good period for the non-banks, a very good period for commercial real estate debt in Australia, which is actually tracking around 5 or 6 years behind what has played out in mature markets like North America and Europe.
Rob, you've given us a fantastic snapshot of what's sort of happening right here and now and things that have led up to this point. How do you see commercial real estate debt evolving over the next 12 months in particular? Yeah,
look, I think the sector in Australia is relatively embryonic. That differs from, as I said, we've seen in North America and Europe. Here we still have the dominance of the big four banks. They are increasingly being impacted by late onset regulation in the Australian market. They're becoming increasingly weaker competition to the non-banks. As a result, we're seeing significant inflows of capital to commercial real estate debt lending in Australia through the non-banks. And I expect that trend to escalate over the course of the next 12 months. I expect you'll see more Australian superannuation funds, more foreign pension funds, sovereign wealth funds and insurance groups look to deploy increasing amounts of their allocation towards commercial real estate debt in Australia, recognising the outsized returns at this point in the cycle. And it reflects in the fact that the banks in Australia today are still around 70% market share, which is particularly large relative to, again, what we've seen in North America and Europe, where the major banks are less than half the market. And here the non-banks are still only around 18-19% of the market. And our view is that that percentage will increase materially. There's a huge funding gap that's emerging as the major banks are stepping back and unable to provide solutions for a lot of borrowers in the market, and the non-banks are going to fill that gap. So it's going to be, I think, a very interesting time for real estate debt investors with some pretty attractive or strong tailwinds in the next 12 months.
Rob, again, fantastic view about the next 12 months. Thanks for sharing those insights. Let's go out a little bit further. I'm not asking you to crystal ball gaze or anything like that, but 2 to 3 years out, in terms of the size and the scale of this opportunity, you've given us some insights already, but what does that look like 2 or 3 years from now?
I think 2 or 3 years from now, you'll see the non-bank sector increasingly mature in terms of not just its scale, but the types of deals that it's participating in. I would expect the non-banks to genuinely compete with the banks for institutional grade investment lending in this market. I think you'll see the capital that funds that lending, again, increasingly sophisticated. It's an incredible opportunity where both institutional capital and high net worth private capital can sit together and jointly fund and participate in the evolution of a genuinely exciting investment class in Australia. There's no doubt in my mind, without the risk of crystal balling, that the next 3 to 5 years will see this become a very deep, mature and invested market by all forms of capital in Australia. And there's no reason why that shouldn't also be a particularly successful period of time for investor returns as well.
Rob, just one thread that I would like to pull on there, if I may. What will be the major driver of that growth? So obviously there's the funding gap and the fact that the banks are no longer able to meet that demand. But is it because we've got large immigration and there's huge demand for these projects and they have to be built?
No, absolutely. It's a great point. I mean, the reality is we're in potentially the largest undersupply of housing in this country since the Second World War. We have a huge problem in terms of lack of supply. And we have that at a point in time where the immigration tap is fully turned on. And, I've got kids who are out there looking for rental properties in the market. It's incredibly challenging. So government and private sector will no doubt work together in the years ahead to address the housing crisis. But if you're lending into the residential sector, be that land, be that apartments, be it student accommodation, be it built to rent, all the living sectors in Australia have very positive outlook ahead.
Rob, do you have any final comments for anyone who's considering investing in commercial real estate debt and the MaxCap Investment Trust?
Chris, look, I would say MaxCap believes that we're entering into the golden age of commercial real estate debt. So if you've got an interest in investing into commercial real estate debt in Australia, please contact us. We would love to have that conversation with you.
Thanks so much for sitting down with Livewire, Rob.
Pleasure. Thank you.
If you enjoyed that Fund in Focus, why not give it a like, and don't forget to follow our YouTube channel because we're adding lots of great content every single week.